Another important factor too, as you begin to embark on your own, is how stressful money can be and debt. If they can control their money and live within their means, they can, that can be one area they don't have stress, separate from all the other areas.
If you're worried about your investing, especially in economic turbulent times, the impact inflation may have on it, your own personal finances, in a very bleak outlook that the economy may be showing, well, rest assured, in this episode of KEAL, we have Mark Zoril from PlanVision, who has his own investing firm and helps many, many clients all throughout, especially the United States, give them assurance about their track for their investing and their financial well-being. And he's going to set us straight on some very important topics related to investing and some of the worries going on that are percolating with inflation and everything else. So Mark, welcome back to the channel. It's a pleasure to have you. How are you doing today?
Great. Thanks for having me back, Devin.
Thank you very much, Mark. And let's just get right into it. And we're going to keep this particular episode really to the point and concise. And so you can really walk away with some really important information that Mark's going to give you. So I want to start off firstly, Mark. Let's just talk about a little bit about what your firm does and why you decided to help people in this arena.
Well, I've worked in the financial services now for about 27 years. And how I got into it is just I kind of stumbled into the financial services as I was looking for a career opportunity in my late 20s. And so I landed at a firm that was a national distribution firm, VALIC, which works, generally speaking, with educators and nonprofit organizations around the world. And I was doing that. I did that for about 17 years, from 1995 to 2012. And in my work with VALIC, much of my interaction was with individuals and helping them with their investments and financial planning, even though that's not what I started to do. I set up PlanVision, my current firm, 10 years ago. I wanted to work in a different capacity, in a different way with people. And what I enjoy about what I do and what we do is individual planning. We do it on a small flat fee basis. We don't manage people's assets. We give them recommendations on suggestions on how to invest and how they can handle their assets going forward and review them periodically with them, but we don't manage their assets. But I enjoy the work that we do quite a bit. Our firm is growing. I enjoy the interactions with our clients because, generally speaking, we get very positive reinforcement from our clients when we work with them. They normally get a sense very quickly of how to improve their investments and how to improve their finances. It's not an overly long process. And the way that we work with them is very straightforward, very direct. There's not much uncertainty about how we're going to work with them when they hire us. Our fees are very transparent. So my point is that I guess I'm not sure exactly how I got into this, but I've been doing it a long time and I really enjoy it. And it's very gratifying work with pretty immediate payback for us as far as that gratification. So it's a lot of fun.
Well, that's excellent. And it sounds like you have so much experience in this arena and really have a positive impact on many people's lives and really set them straight with their finances, which is really on top of mind of people's, worries or expectations day to day. So that's really great work you do. And don't worry, everyone, if you're listening on the podcast or you're watching on our platforms, we'll include all of Mark's information in the description and pinned comments. So if you're interested, you can check out Mark's company and work with them more directly. So Mark, what is one of the biggest misconceptions that you see, maybe especially when people first start out with you, that they have around investing in general? Do you believe, from your own point of view, that people overcomplicate the way to invest and how to get started, and what might be the reasons around that?
Well, I think there is a perception that investing and maybe even financial planning is overly complicated. And certainly for many people, there's a fair amount of jargon that's used in the industry, sometimes intentionally, sometimes not intentionally, that can be intimidating for a lot of the people we work with, they come to us and they may have already done some research. And what I mean by that is on the web with the fire community and different retirement podcasters and bloggers, they can become better informed about investment options, alternatives that are simple, that are low cost, index types of investments that we normally recommend. Authors like Andrew Hallam, J.L. Collins, John Bogle's written a number of books. So many of the people that come to us, Devin, have already been in some ways influenced to better understand how to have a simple portfolio. But that's not the case for all the people we work with. There can be a perception that, oh, somebody's got to manage this money for me, and that they need to try to stay ahead of the market, that there's value in doing that. So there certainly are perceptions that people have about the right way to invest, and that can prevent some people from getting started. For other people, it may not be a priority in their life. They may feel intimidated by, again, the jargon that's used, so they just don't get around to doing it. It's as if you're going to buy something, buy a product or a service, and you don't speak the language, or you feel like you might be missold, or put your money into something you don't fully understand. It's easy to put that off. So, yeah, that can the notion of people thinking it's more complicated, or people being intimidated by the industry, can affect people's willingness to start investing.
Well, yeah. And sometimes having too much information and saturated information can lead to total and utter confusion. So that's
true.
No one knows where to go from where. Do you believe in general, because of especially the younger generations come up, the alpha, the Gen Z, the younger millennials, do you think in general it's something that should be taught more in society, schools at a younger age, personally?
I don't really know. I mean, I suppose hardly anybody would take the position that, young people shouldn't be better educated about their finances. Whether or not it's appropriate to have that kind of education in school would be a separate debate or discussion, and that I don't know that I would weigh in that strongly on that. On the other hand, I have certainly interacted with clients that have told me in their college years, they ended up getting educated, typically those that have some sort of a business degree, or have done some business schooling. What it seemingly would make a lot of sense that when kids come out of high school, that they would have a better awareness of personal finance. I suppose it's up to education administrators, or those that design these programs, to evaluate the limited amount of resources and whether or not that's a good use of education time to focus on, personal finance. But yeah, even fundamental stuff, a lot of people just don't know, like what's on their paycheck. What are these things, these deductions here for Social Security and taxes? How does our tax system work? What is the role of a bank? What is a financial services company? How does that industry work? Yeah, I mean, if younger kids had a better awareness of this, they would be, I think, much better prepared to handle their financial life.
No, absolutely. Because like you said, it doesn't necessarily maybe have to be in school or anything like that. Maybe something, more programs in general offered society about it. The reason being is because, I found out really quick, like 18, 19 years old, everything in my life was being impacted financially in some way. And there were so many things I just didn't know and had to learn sometimes the hard way, and just like, sometimes you do learn that way. But I mean, I think if you're a little more prepared, like maybe open a Roth IRA, your parents helping you when you're 6 years old, maybe we could talk about retirement when you're 30, who knows, but that's a whole nother thing. But how important is that in general for you, Mark, when you're advising clients to either the way to invest and how to invest, and especially at, their own particular age? How important is that starting young?
Yeah, it's important. I would also start with a step prior to that. Maybe it's not even the investing, it's fundamentally understanding how to live within your means. And now you don't necessarily have to budget, but you shouldn't really spend more than you bring in. And those are important. I guess that's an important concept, living within your means. And it involves some other things which are difficult for people to manage. It involves making trade-offs and potentially making sacrifices. For some people that simply don't come from families that have any sort of wealth at all, it can be very difficult to see peers or those that simply have more money. And so you can end up finding yourself spending more to keep up with people that just simply were given more money to start with. So that's a factor, is how do you manage your own behavior when the allure and the impact of money influences your social groups that you run with. Another important factor too, as you begin to embark on your own, is how stressful money can be, and debt. It can be very damaging on their own morale, their own psychology, their relationships. So getting a good handle on money and how you manage it can have a great long-term impact on how somebody's, I guess, their psychology about their life unfolds. At least this is one area. If they can control their money and live within their means, that can be one area they don't have stress, separate from all the other areas. Then if a younger person has a good sense of that, then naturally in doing something with the extra money you have is investing it, putting it in a Roth IRA, maybe doing your company 403B or 401k plan, even just building up an education, just building up an emergency fund. Many people are kind of paycheck to paycheck, and there are actually people that are making okay money. They just don't get around to building up an emergency savings. So
cash is king, right?
Well, cash certainly helps, takes off the pressure.
Well, and all those points you're alluding to are so incredibly important, Mark. And if you don't mind, I want to go back to debt for a second and the way in which you manage money, or you don't really manage money well. To be honest, like, we've all heard the famous Dave Ramsey, baby step approach to debt, whatever that. I haven't gone too much into it, but I heard about it. From, let's say, PlanVision's or Mark's point of view, no one wants to be in debt, period. But if you were to try to get out of hole, what would be your best approach and advice to people?
It involves some soul searching for some people, because there's an imbalance between what they're bringing in and how they're living their life, their decisions that they're making. And there can be other emotional issues that people grapple with anyway that they have to kind of come to terms with. But assuming somebody's carrying on some debt at this point, and they're not making any progress, they're going to have to make some harder decisions about what they're willing to give up and how are they going to change their behavior. Many people will find this process to be quite liberating, to go through the process of taking control of their finances. Yes, and Dave Ramsey is probably, from my perspective, the loudest voice when it comes to getting your act together when it comes to debt. And I don't know a lot of the details about his program, other than I think it's really a wonderful way for people to view debt. Now, I'm not quite as anti-debt in many cases, but man, it is wonderful to hear of people that are able to maybe change their behavior in such a way that they can get debt behind them. And that this may mean for 3 months, 6 months, 2 years, 4 years, 5 years, that they significantly alter their behavior. Assuming that they've run up $10,000, $20,000, $30,000, $40,000, $70,000 worth of debt. They still have a job. They can pay the bills, but the debt's getting away from them. Maybe they have to go move in with somebody for a period of time. Maybe they have to get an extra job. Maybe they have to stop doing things that have become important to them. But as they go through this process of beginning to spend that money down, which can be very hard decisions for people to make, it becomes very powerful to them.
It's about give and take. It's about sacrifice. It's about having a goal, right? In the end of the day, they all go hand in hand, and really the discipline to do it and follow through more than anything. But I think you're absolutely right.
And his approach of the baby steps is to give people confidence, I think, that you start making this incremental progress. Oh, I can do this. And then you want to do more and you want to do more. And some folks become fanatics about it. And of course, you can argue, oh man, they've gone too far. But I mean, how like, what's the problem with being a nut job about paying off your debt? Like, that's you could be you could be a fanatic about a lot worse things.
It's like I'm a fanatic about cleaning my house. I don't want to keep it. I stop cleaning so much, for goodness sake, right?
Yeah.
Mark, we only have time for a couple more questions. On top of mind for a lot of people, especially in 2022, I got the year right, thank goodness. In 2022, right now, is the issue of inflation. Some people are not so aware of really what it is, what it does. Some people take it out of context in different ways. Some people just think it's a total invisible thing, ambiguous, can't pinpoint it. In regards to, let's just say, strictly related to finance and how they should be worded their day to day with how they spend their money or don't spend their money, what is your take on that?
Inflation can be tough. I'll try to be relatively brief on this, but inflation affects different people in very different ways. My father's 90 and he's still alive, spends very little money. He's virtually unimpacted by inflation. People that have if they're retirees or pre-retirees, they have a good asset base, they'll pay more for stuff, but it's not really going to change their lifestyle. People that live on the margins, though, can certainly be damaged by inflation and how it affects their monthly pocketbook. I would not, if you're an investor, I wouldn't necessarily seek out some sort of a short-term hedge against inflation. You can do it. You can invest in commodities, but they involve a lot more volatility, and you may not get the reward on that. The best long-term way to beat inflation historically has been the stock market. You just own stocks for the long run. They should outpace inflation. In the short run, well, what do you do about inflation if it's impacting your monthly inflows and outflows? Well, maybe you got to make a little more money, or maybe you got to spend a little bit less money. That's kind of how we are impacted by these things. People have to cut back here or there. Gasoline has gone up. Now maybe it's receding a little bit. We've seen interest rates have gone up for home buyers. So they're just trade-offs people have to make, unfortunately, when we see the impact of inflation in the short run. And where also we could see this damage, I'm no economist, but if inflation if inflation increases, if we begin to see a recession, what ends up happening is you can see people losing their work. And that's where a recession can become a personal depression for some people. The rest of us are impacted in a certain way, but people that lose their work due to inflation or a recessionary event, those are the ones that are damaged the most. And so you just got to keep plowing ahead, looking for work if that happens.
100%. Totally concur with that, Mark. Yeah. And lastly, what is your overall long-term vision for PlanVision as Mark and your team? And how do you, for let's say the long-term, like investing in stocks, or your own fund, what is it that you hope to bring about in a very, very positive way to your clients and to society in general? What is your overall vision of that?
I don't really know where our firm is going, but my view is that investment guidance and financial planning can be presented if you use technology efficiently in a very low cost way for those people that want it provided that way. So using technology is very critical to how we provide guidance to our clients at a low cost way, and they have to buy into that as well. But yeah, it would be the idea that hopefully our business and our business model can reach a lot of people, a scalable business where they can get guidance and advisement at much lower cost than has normally been the case, and that our business can be profitable and grow in the long run as we hopefully are efficient at this.
That's amazing that you're incorporating the technological aspect to it, as a lot of the younger generations coming up are seeking that out and doing it in a way that's very facilitatory and they can easily invest into. So I think that's a very smart move. And as we conclude right now, Mark, thank you so much again for being on another episode with us. It's a great pleasure. We're going to include all of Mark's information in the pinned comments, the description, the show notes, everywhere. And one last time, Mark, please let them know where they can go and seek you out.
Sure. The best place to find out more about our firm is our website, and that's PlanVisionMN.com. That's PlanVisionMN.com.
Excellent. So we will have all that included. So go check them out. Work one-to-one with Mark and PlanVision and get on track with your personal finance and investing today. Thank you very much, Mark. It was a pleasure having you on this episode.
was delighted to be here. Thanks, Devin.
Thank you. We'll see you all in the next episode. Take care, everyone. And make sure to share this URL if you really enjoyed this episode with Mark, and if you believe other people need to be more informed about these issues related to personal finance investing. Thank you very much. We'll see you on the next episode. Take care, everyone.